Introducing Zach Davis and Josh Anderson with the Sound Money Podcast.
Hello and welcome to this week's episode of the Sound Money Sound Principles Podcast. Josh Anderson here with Zach Davis. How are you, Zach?
I'm good. Hey, what's up, guys?
Hey, it's an awesome day. Excited to be back with the listeners today for a few minutes as we dive into our dual purpose of the podcast. Every week we take a few minutes and we talk about the sound, what's going on in the sound money, gold and silver, precious metals. And then we spend the back half of the podcast speaking about a business principle for the week that we found to be helpful in our entrepreneurial journeys. So excited this week to take a few minutes and share a little update about gold and silver and what's going on in the world with it. We've seen some unique things. I'm sharing the infographic up on the screen for those that are watching, coming from the sound.money page under the news tab. Want to jump in, Zach. You know, we've been talking about this for the last couple of weeks. Not a lot changed this week other than we got a few more glimpses of what we've already known about maybe what to expect for the summer of 2026, right? We definitely are getting a real clear path of what gold and silver is going to look like it's going to do for the summer months. Typically, for those listeners that are not maybe like gold and silver aficionados, right? It's not your space. It's not what you know. Summer is often the slowest time of gold and silver. It's the time when, for one reason or another, throughout the last 50 years in particular, the gold and silver is usually dipped in the summer months, Q2 and into Q3. And then it is always like a rocket ship in Q4. Because of some tax advantages, and then into Q1 again. So but we're going to clear picture, Zach, right now about what we could kind of start to see is what's going to happen through the summer months. A couple things around that, right? On the gold side, you know, we've been talking a lot about this Iran deal the last few weeks. It looks like it's getting awful close. And we saw some things this week with China and the United States and with this Iran thing. And, 30,000 foot view, Zach. What did you see this week out of our Sound Money report that we put out? That maybe some high level things you want to touch on for a minute.
Well, it looks to me like gold has found a pretty significant floor, which we talked about a couple weeks ago, right? That if it just kind of hung around this price where it's at right now and just kind of bounced, then that would be a pretty significant indicator that it's probably not going to go much lower and it's going to continue to climb throughout the summer. Could go fast, could go slow, depending on this whole Iran thing and rate cuts. But I think the biggest impactful thing that came out of this is the fact that gold did rally a little bit this week, and even in the light of some good news out of Iran, which traditionally people would think isn't going to happen, right? And so good news, gold goes up. What's that all about?
Yeah, typically peace makes gold go down, right? Gold's a volatility metal in the past. But what we're finding in the new age, in the new world, is that, boy, peace doesn't make it go down. Peace only exemplifies that there's a monetary problem around the world. There's a debt problem. And what we're seeing right now is, gosh dang, there's a good chance that they make a peace deal. You get some lasting peace. It drives oil down, which should drive gold down, which then in this case would also potentially drive interest rates down. All we need is inflation to cool off. And inflation right now is tied to energy, overpriced oil. By the way, I'm a little sickened, right, Zach? Most of our listeners know you and I do a lot in oil and gas. I'm a little sickened, right? A little, because I just go, man, this Iran deal is getting out of control. We're buying no oil from Iran, like America. Like, we're a net exporter now. We buy none from there. So it's really sad when our people are now paying $6 a gallon for diesel in our state. And we're still producing it in the United States all day long at a happy. When we're producing above $60, it's break even. Above 70, it makes real money. And so it's like, this is getting ridiculous, right? We got to get this world thing figured out. But typically that would that inflationary action of a peace deal in Iran would potentially lead to the market looking 6 months ahead and saying, hey, we can expect a rate cut from the Federal Reserve, which then would absolutely drive gold up in price. And I'm a firm believer, like, you and I buy options. We do option trading in the world. And so we understand the option markets. And gosh dang, the common person just can never really win because the market's already priced 6 months in advance of what the prediction market is. And what the market is saying about gold is you dang well better bet that gold's going up over the next 6 months, because it's already priced in. And so, I wish the common man could understand it a little better or use it. And today with AI, they probably can, Zach, pour themselves into it. But the market's
Yeah.
already so.
Yeah, well, and I think if everybody remembers from the last couple of podcasts we've talked about the inverse reaction that gold and silver have with rate cuts and rate hikes, right? Because there's only so much money, and so when you got good news in the world, everybody's like, oh, gold's a fear mongering thing. But when you got good news and there's a signal that the Fed might cut the rate, and you're going to make less money in your bond market, then money moves from the bond market back to gold and silver, driving price up, right? So it's counterintuitive, but if you watch interest rates and what's going on, like money has to go. We're talking the big institutional money, like the big money. And that's what you're talking about. Like it's looking at it going, hey, they hinted that there's a peace deal in Iran, which means there could be a rate decrease. And if the rate decreases, I make less money in my treasury bonds over here. So I'm looking 6 months ahead going, rates could come down. I'm getting all my money out of there and I'm getting it back over to gold, right? I'm not making money over there anymore.
Yeah, we drove prices up 4% last week on gold. Like that's the reality, right? It's pricing for the 6 months from now, right? That's the way that markets are built on options trading. And so that's what we're seeing today, which is remarkable. I will jump gears for just a sec because silver did something really cool this week, Zach. For our listeners, if you didn't know, I mean, you'd have to kind of live under a rock maybe, but to not know this. There's Trump went to China and he met, and coming out of it, most people didn't think anything of it, but we were watching it with eagle eyes because we anticipated that he would go there and he would use his one magical lever that he loves to maybe reduce tariffs, right? And that's what he did. And so by reducing the tariffs, we saw a spike in silver, right? And any takeaways from that, Zach?
Yeah, I mean, the difference between gold and silver, and the reason gold didn't do what silver did and go all crazy is because, remember, gold is looked at as like a currency, right? It's a trading mechanism. It's a currency. That's not how silver is traditionally looked at. It has a dual purpose. There's a lot of utility value in silver. So it's in a lot of solar panels and data centers and all this infrastructure and medical equipment. And so when tariffs start coming down, well, that signals to the world, the manufacturing world, that they're going to start ramping up and building things. When you start building things, you need materials. One of those materials happens to be silver. So if there's a high demand for productivity to start back up again, there's going to be a high demand for silver to be used again. So when you see these tariffs and these deals being made across borders and across the pond, and you look at production is going to start going up and manufacturing, well, you can bet any of these metals like silver that are used in utility value and a lot of these different things, it's going to go up. There's only so much of it, right? Supply and demand.
Yeah, and that's what I was super my excitement over the week was mostly around that, because when we see these tariffs come down, we absolutely know silver is going to skyrocket again. JPMorgan came out with that news and said, hey, this is what we've been waiting for, to see silver maybe spike all the way to $300 by the end of the year, because the tariffs were holding down the AI infrastructure in China. And we talked earlier, they have such a shortfall of silver in China today for the manufacturing side and the needs for the upcoming AI boom that, but now with the reduction in this tariff, right, mass from 145% to 30%. On it, right? So this is significant enough that things in the market are going to move when it comes to the usability and the commerce of silver. And so, when you know how to read the tea leaves, you can make wise decisions. And for our listeners, never been a better time. Like when Trump and Z met and did this. This is a big deal. We may not see the full effects of it until Q4 of the year, but these are the kind of things that dramatically move the needle. And then people come in October and they're like, "Oh my goodness, why has it spiked so much and I missed it?" Well, you missed it because the decision was made in May, right? It just takes markets and it takes manufacturing a period of 100 to 90 to 120 days to ramp up and buy and need the production, right? But you can bet 145% tariff down to 30% tariffs on those items going into China mean lights out. Like everybody went to work acquiring in that space and making plans between now and the end of the year. So hopefully you use that information wisely, because I know we are in a lot of things. So
yeah, and by the way, that's exactly what we just talked about, right? That the market, the big money, they've already priced it in. They're not looking at today, they're looking at 6 months from now going, yeah, the production's not happening now, but it's going to happen in 6 months. And that's why you all of a sudden saw this spike in silver, because not only did manufacturers go out and purchase a whole bunch because they've got to have supply before their competitors get it, but also all these big money, the network effect of all the money went out and said, hey, it's going to move, go get it now, right? Because in 6 months, it's going to go up. I want to buy at a discount. So that's why you see this big spike, 6% in one day, because everybody went and grabbed some because they know what's going to happen in 6 months.
Yeah. And that's the thing. And, this used to, we talked before, this used to be a speculative market, right? Everything was about speculation. Now, silver, different ballgame. It is a true commodity and a resource and a manufacturing component, which changes the ballgame forever. We saw this with things like lithium in the past. We saw this with, we saw it in the past with fertilizer and core ingredients of fertilizer. Things like potash, where you experienced this, Zach, in our past life, right? So we know what happens, right? When something goes from just being a commodity to being a used commodity and part of a revolution, you want to be playing in those spaces. And so kind of fun. We're excited about those things. It also begs the question, we're going to transition here in a second, Zach, into this week's business topic, but they actually go hand in hand this week, which doesn't always happen. But in gold and silver, it's really important to take an approach where it's legacy over quick wins, right? When you look at things and it's not about the short term, it's about looking into the future, 6 months, a year, 2 years, 5 years, and going, hey, I'll be in a better position if I buy gold and silver today in 5 years than I will if I wait and try and do it in 5 years, right? It's a legacy play, always has been. And it's no different in business. Like you and I have experienced this over and over and over. We want to transition for a minute into this week's business topic, because this is something we're absolutely passionate about. That this idea that quick wins, legacy over quick wins, right? Oftentimes in business, people look way too much for the immediate quick win, and they don't make plans for the future. And we can clearly share that in our experience, over and over, if you start something, not with money in mind, but with legacy in mind, trying to make a difference versus the quick win, you will build something that outlasts you and has real success. That's quick wins look at short-term focus, chasing applause, trading time for money, leaves no lasting impact, when you do those things, and it fades when you stop. When you stop the effort, it just fades. Legacy approach is much different, right? It's a long-term vision. Sometimes it's making short-term decisions that are hurtful for the company for long-term vision and plan, building trust and respect, creating financial freedom, impacting lives, not financially, but impacting lives through what you do and how you do it, and being focused on things that continue without you, right? These are core principles for you and I. And I'll give you a chance, Zach, to maybe speak to the principles behind, why it's important when you start a business or when you're in the middle of it, even if you started it for a different reason, why it's important to stop and go, hey, what's the legacy we're trying to leave here with this business venture?
Well, I think, we're all here on planet Earth for a purpose, right? And whatever it is that you believe that is, we all have to interconnect and interact with each other. And so when you think about quick wins, actually, when I think about quick wins, I think about Jefferson County Planning and Zoning. That's what I think
No,
about.
no,
When I
Zach.
think quick.
Hang on. We're going granular at the local level of
So
how
we're going
they-
local. So
okay.
if any
Great.
of our planning and zoning people are listening to this at all, you're morons. Okay, you have no long-term thinking. Like there. So I mean, when you think about this, right? Have you ever been to a city or a town where you're driving down the road, or you're driving down the street in the building, you're looking at it going, this makes no sense at all how these streets are laid out, or what even, like, how in the world was this thing even put together? Well, it was probably a quick win. It was probably somebody going, hey, this is a quick money grab. An out-of-state developer came in, bought a bunch of land, put up a bunch of houses, no infrastructure, no thought of in the future of how these people are going to get to school or where they're going to go. I mean, all these types. That's the impact. I think most people around the world or around the country can feel those sort of impacts. When you look around, right, and you look at city infrastructure and you go, this was like zero planning. But when you see a city that's well planned out, you're like, okay, this is really cool. There's, beautiful trees everywhere, and there's gardens, and there's parks and places for kids to play, and the streets are easy to get around, and they're really wide, and you can see how they left room to expand. Like, to me, that's a really good example of where you see the impact. But the exact same thing happens in your business, and whether you're going to grow into the future or not, and how you impact the people around you. If you're growing for legacy, there are a lot of times we make decisions and people will be like, what? Why are you making that decision? That will make you less money, or you should take that deal now because you'll make way more money. But when you're building something for the future and you're trying to put a plan together, sometimes the short term, people would call them losses, but they're not really losses. But the short term sacrifices are worth the long-term reward when you're trying to build something that's going to last and have impact for people for generations and generations and generations. And you think about the business differently, right? You grow it differently. You make different decisions. When you're thinking about just quick wins, it's just a money grab. It's how much money can I make? And then I'm out of here, right? I'm not going to service the customer. I'm not going to warranty the product. It's like, if people call the product line and they need help with their vacuum that they bought from me, I'm out, I'm gone, I made my money. Like, that's not a really good feeling for people. So to me, I think legacy is always the way to go, because I mean, at the end of the day, everything is about relationships, right? And your net worth is never bigger than your network. And so you're building a network, whether you realize it or not, with the people that you're doing business with and you're servicing and selling to and all these things. And so if you're building for legacy, people are going to be around, they're going to respect you, and they're going to want to do business with you. If you're building for the quick wins, pretty quick people are going to go, yeah, I'm not buying that guy's product, or I'm not going to let that guy build my house, or I'm not going to, because they know the end result, right? It's completely transactional, short term, and you're going to get burned.
Zach, I'd imagine a lot of our listeners have gone through this similar experience in their personal life where they lived in a home, maybe even as a child, or as an adult, but either one, where they went out one day and they planted a tree. I remember, my dad and mom really worked hard. Our first home that my parents, paid a mortgage on was a home that they worked really hard to put together. It was a flood home, one that got taken out by the Teton Dam, and it was a shell, and they bought the shell and placed it on a foundation and turned it into a home, right? Real hard work. But I remember the day of going out with my dad when I was maybe 10 or 11 years old. And we planted 5 pine trees in the backyard, 20 feet apart, little 3-footers. And we planted one in the front yard. Okay. And but they were just itty bitty, right? And there's 20 feet between them. They look like these little tiny things in the backyard, 20 feet between them. And it's like, I said, Dad, why don't we have 10 trees? And why aren't they closer together, right? Like, make a fence out of them. And he said, well, one day they're gonna grow, and they have to have room to grow, or they can't live. They don't have enough sunlight. I lived in that home for a decade, right? In that decade, Zach, I'll bet the trees grew a foot. Not very much in that decade. And if you've ever planted pine trees, right?
They're slow.
Maybe 2 feet. maybe 2 feet. They probably got to 5 feet by the time I left that house after 10 years. I recently drove by that home. The trees are 60 feet tall. They're 50 feet. They're massive pine trees. They've grown in the whole 20 feet between them, right? And the one in the front yard takes up most of the front yard and creates amazing shade. The backyard is completely, you can't see into the backyard because of those 5 trees. The people that live there now get to greatly enjoy the benefit of having the biggest trees in Yukon, Idaho. But guess what? My dad planted them 40 years ago, right? And somebody else gets to benefit from them. Most of us have had this experience of some kind, planting a tree, and either as an adult you did it in a house, as a youth you did it sometimes we plant seeds that have no benefit for us today, but we know it's going to turn into something great for someone else. I look at business like that, Zach. Like, we can make money lots of ways, but are we doing something that's going to make a lasting impact for someone else? Whether that's through the development of them and the skills they learn and that they're going to use at the business, whether it's the money they're going to make, whether it's the relationships they're going to make with a coworker that are going to last forever, generational. Those are the things that matter when we talk about legacy over short-term wins. I'm sure you've had some of those same experiences with those.
Yeah. Actually, it's interesting. I was in Spain with my wife and my son a couple years ago, and we went and toured some of these great big castles, right? And these like massive, and the ornate architecture and all the different, just absolutely incredible buildings. But what was so interesting to me is I walked around and I looked at these, is none of them were built by one civilization, right? It was like some dude decided, this is the hill that I'm going to build my kingdom on. And all the village people, they all start building this castle or whatever. And 20 years go by and he dies and they keep working on it. And somebody else comes in and conquers them. And then they work on it. And some of these were like 150 years old before they got finished. And they had multiple conquests, right? People come in and you could see where, that group of people that came and conquered had left their mark and the different parts of the castle. But again, to the point of like the guy who first started it and his vision of what he was building, he knew that in his lifetime, he would never see its completion, but he knew his people would, right? And so he was building it for the legacy of his people, not just him. And I think if you look in history, there's lots of cases where people invent things that they never get the benefit of, or they build companies that they never, the technology is not even around to make the company function the way it needs to function. And then after they die, technology shows up and all of a sudden whoever's running the company now can deploy this product. And it's like a miracle for people. Like it happens all the time.
Yeah. Part of we talk about gold and silver every week, and it's because we've fallen in love with what it can do for people. Well, that's because we have a company that we set out to create a legacy for other people, not ourselves, right? For us to help someone who never bought gold and silver actually have it, protect themselves, right? It was the premise of why we created the first ever company to create fractional ownership of physical gold and silver, right? People had fractionized it in the past, but they had done it with paper, which is not a real asset, right? And so we set out to say, hey, we can leave a lasting imprint for people who take advantage of that. I've always said, Zach, when you set out with a mission driven around legacy for a company to start, it seems like those are the ones that always win, but they don't win fast. They take time. And so for our listeners, if you're looking at something, if you think you can do something that has lasting impact, you should do it no matter what the cost or what the effort, and not focus on the financial reward. I think the best example of this, Zach, is probably all of us who have children of any kind, right? We do this, right? We invest in them for a long period of time. in their growth, in their development, in their maturity, in the way they treat others, the way they love their moms, the way they love their dads, the way they love their grandpa. We invest so much time and effort in them for nothing more than what? The
The
legacy.
hope they'll put us in a good retirement home.
Well, that's the hope. That's the hope. They'll put us in a good place. But we do this, right? Like this is what it means to be a father or mother. This is what, and that's why I just think the same approach should be taken anytime that we start a business or anytime we're working in a business. We should take the approach of what can make civilization better, what can my family and other people's families better. What's the long-term approach to the problem? Does that mean the company will always be there? No. But at least as you're making decisions, you have something that anchors you to why you're making it or why you're doing it. And I just think, we do this in lots of aspects in our life, and we should transfer it over and look at our businesses and look at our opportunities as that. They're our children. They're our legacy. They're what people will say or talk about us and how we interact with them in the marketplace long after we're gone or long after we don't participate in the business anymore.
Well, and I think your businesses are a lot like your kids, like you're saying, like when they're first born, they're like these ugly little things that look like aliens. Like they're not, I mean, moms think they're cute, right? But not very many dads think brand new babies are cute. Come on, let's be real. Like they're funny looking.
My wife's not listening.
But then they get cute, right? And they go through this period where they're really cute, and then they hit the awkward, 10, 11, 12 years age where they start getting really ugly again, and their knees and their elbows are bigger than everything else, and right? And then they kind of grow out of that stage, and they start, getting pretty if they're girls or handsome if they're, but they morph and they change into something different than what they were in the very beginning. And I think most businesses are like that. At least in my experience, that's the way it's been. You start out thinking you have this thing, and that's what it's going to look like forever. But then pretty quick, you find out that if you're really building a company for the long term, that outside forces will make you make decisions for your business that could completely alter what your business looks like or the shape that it takes on, right? Or even the customer that it services or how it interacts with the customers or all these different things. It might be different. You might end up selling different products than you thought you would ever going to sell. But if you're building it for the long term, that's okay, because you're just letting that business grow and develop and go through its awkward stages until it really finds what it is. And then it does become this legacy company where people recognize it for what it is. And I think too many people panic because it takes a little bit longer than a quick win. But I would say to anyone who's in that scenario where it is taking long, just relax, because one thing I think also that I found, and I think Josh, you'd say the same thing, is what's interesting is as it goes, the right people eventually show up in your life to help you move your business to the next level, and the wrong people eventually go away, right? And to help your business grow. So if you're in this spot where you're in the ugly duckling stage, you're like, I don't know what this business is right now. It is not working or, not functioning. Just be patient, keep networking, keep talking to people, keep being inquisitive, keep going at it. And the right people are going to show up, and you'll make the right connections where somebody will come along and be like, oh, I see what this really could be. Or they'll give you that one piece of advice that all of a sudden helps you turn the corner and take you to the next level. And if you have people in your business right now that are holding you back and you know it, or even if you don't know it, then they eventually will just find themselves out, and the business will morph and change and grow. So be patient, just keep at it and be patient.
Yeah. About a decade ago, you and I and one of our business partners, Roger, we acquired a lodge, right? A lodge that we all loved, right? And this lodge called the Salmon River Lodge is in the Frank Church Wilderness. It means something to us, right? But the gentleman that had it before had ruined its legacy, right? Had run it in the ground financially, but more importantly, had built a reputation in a small town and with all of its clientele and all of its neighbors downriver, to where no one had respect for the business. No one liked it. And whenever anyone spoke of the Salmon River Lodge, they spoke ill of it, right? It was a negative experience. And when we purchased it a little over a decade ago now, we said to ourselves, the most important thing for us is to actually resurrect its good name. And it wasn't about money. It was about, hey, at every turn, what can we do in the community or with those we come in contact with downriver or customers to make them come away and say forever, wow, the Salmon River Lodge is a special place. Its people are the most helpful people in the world. And when there's a crisis, they're there for me. It's taken 10 years, right? But now, whenever you go into that town, there's a little town of, Salmon, Idaho, that's about an hour away from an hour and a half away. Now, when you go to the town, everyone speaks highly of it. Downriver, everyone greatly respects it and loves its employees and its people. But it was a consecrated effort for a decade of being legacy focused first, not quick get money. How are we going to get our money back for this purchase? How are we going to get the most dollars out of the public? But service and legacy oriented, right? And for you and I, it's been a really fun thing to change the legacy and how people see that company. And any thoughts on that?
Yeah, it's 100% true. And it was never a moneymaker.
Oh no,
right?
It's never. It's a money
But
pit.
yeah, but there's more to life than money.
Yeah. How do you feel when people speak so positively of the lodge?
Yeah, it's exciting because you're like, hey, I made some small impact in that person's life. And for the people that go down there and have amazing experiences, that doesn't need money, right, to make you happy. Like you don't have to have this bank account that's getting clear full of money because they're having these experiences. There is gratification and payment enough when you see people experience the wilderness for the first time, or experience whitewater rafting or horseback riding or hunting or fishing or whatever we take them to do. Like that's payment enough. And that's part of this legacy, right? Is knowing that, hey, never going to get rich off this thing monetarily, but we're getting rich off of this thing in value of seeing people have these really cool experiences and knowing that we're giving back in some small way and helping people experience what God created, right? In this beautiful earth that we have to live upon. Like it's not always about money. It's not always about money.
No, it's not always about money. It's about legacy. And for the listeners, just keep that in mind, right? If most of you are making some hard decisions in life and in business every day, always take the time to think about it and put it in perspective of what's the long-lasting effects of this decision for the legacy of the business and how people see it and how people interact with it. And it means more than ever in the new revolutionary time of the AI boom. What's going to matter more is how people feel about you and your business than ever about the business itself, because people will demand real as time moves forward. At least that's what we think. We think there'll be a renewed focus there.
Yeah, I mean, today we live in the world of like, what's the daily deal? Like, wake up this morning, have an idea, AI program a business, and have money in your bank account tonight, right? My wife just ordered some stuff offline the other day, and when it came, I'm like, this is the cheapest crap I've ever seen in my entire life. It's going to break within 5 minutes. And I promise you, whoever built that site, all they were thinking about was, I'm going to sell as many of these widgets as I possibly can, as fast as I possibly can, until the game's over, and then I'm going to shut it down, and I'm going to go do it again somewhere else. Like, there was no thought to, man, someone's really going to enjoy this product, and they're going to get lasting enjoyment out of it, and it's going to last a long time. Like, it's a piece of crap. And that's, in the world today, people really are looking for things of value that are going to last, right? And build. In fact, I'll give you a quick example of people showing up and people going away. Years and years ago, this is clear back in college, I was in the oil business, and we started doing a bunch of stuff in the oil business. And I was wondering, where's this oil, like, who owns it in the ground? Like, how does this actually work? I was hauling at different places at a trucking company. I'm like, who owns this stuff? Because they're not out here sweaty and they're not getting dirty. Like, somebody owns this and they're not moving it around. I got to figure this out. It was years years after that, trying to figure out how in the world do you buy this oil, right? I had no idea how it worked. And there was a gentleman that we had done business with, and it was a couple years after we had done business with, all of a sudden on a phone call, on a conversation, I was sitting in his car and he makes a phone call to somebody and says a couple of key words. And all of a sudden I'm like, whoa, hold on. Right. And at the right moment, the right person showed up in this like grindingly slow business trying to figure this out. And all of a sudden overnight, it was like light speed, and the learning curve was collapsed, all because of this one individual showed up, right? And then on the back end of that, there was another gentleman who was
Shady.
He wasn't the shady would be a good word. He was not the most trustworthy, upright individual in the world, but we made a bunch of money with him.
Yes.
But it caused a bunch of problems for the business that we didn't know were coming or didn't know we had. And eventually that person just faded away and everything changed. Right. So like
faded away to federal
just shows up.
It faded away to federal.
He went to prison. He went to prison. Yeah, he did. So like that, but there's an example of what I'm talking about, right? Like it was 6 or 7 years trying to figure this out. And then all of a sudden the right person shows up at the right moment, and then it's off you go. And then in that relationship, there was this guy who was always kind of problematic, holding the business back. And then all of a sudden, like, he went to prison. He goes to prison. He's out of the way. Right. And then the business could blossom and grow. So just be patient.
And I love you shared that, because when we started that business, right, is a company we have called Blackie Royalties, and we said it was never about quick money.
No,
it was about legacy. And we said we want our families to own oil in the ground long after we're gone. And we put in years and years and years of work to learn it, do it, before it ever made money. But once it made money, oh man, it made lots of money.
It did really good.
And it is legacy, right? But if we would have done it for if we would have looked at it short term without the legacy, we would have been just like that shady character, and we would have went to federal prison with him, because he took shortcuts, and it wasn't legacy driven for him. It was get rich quick. And he made $20 million in 1 month, but guess what? He landed his butt in federal prison. And so, legacy always matters. It always matters. Integrity and legacy matters. Well, Zack, it's been great to be with the listeners today. We're excited to take a few minutes today and share some of these experiences. And we just want to say, man, great time to be alive. And whatever you do, look for the positive in it today. There's great opportunities in the gold and silver market, great opportunities for a entrepreneur who's willing to put in some hard work and to be legacy driven first. And so I'll let you have the last word, Zack, today.
Yep. No, it look for the opportunities. They're everywhere, right? It's easy to get bogged down by the news media. It's easy to get bogged down by all the negativity that's happening around and all the conversations going on, but just look for the opportunities, be grateful, and they'll show up and you'll win, right? We love you guys.
All right. You guys have a great week. See you next week on the Sound Money, Sound Principles podcast. See ya.